Some SUV owners are writing a check for over $400 a month just to keep their vehicle insured, and they haven't even driven a single mile yet. And just to be clear, they're not paying this for a sports car or some rare exotic that belongs in a museum. They're paying over $400 for the exact kind of SUV your neighbor drives. The kind sitting in school parking lots and grocery store driveways all across America right now. If you own one of the vehicles on this list, that money is already leaving your account every single month. You just might not realize how much. These are 12 popular SUVs with insurance rates that should be illegal. We're counting down from painful to absolutely criminal. Number 12. Chevrolet Tahoe. The Tahoe is the definition of the American family SUV. 3 rows, serious towing capacity, and enough space to handle everything life throws at a family of 5. It's practical, it's reliable, and it's one of the best-selling full-size SUVs in America for a reason. But full coverage on a Tahoe averages about $2,700 a year. That's $228 every single month just to keep it insured. Here's the thing. The Tahoe weighs nearly 6,000 pounds, and when a vehicle that size gets into an accident, the claims are expensive. Add in a base price pushing $79,000, and insurers are already calculating what it'll cost them if something goes wrong. The IIHS front corner crash test results are not great either, which quietly nudges your rate up even further. The Tahoe gets marketed as the affordable full-size option, but it still costs more to insure every month than some people's electric bill. Number 11. Jeep Grand Cherokee 4xe. The Grand Cherokee 4xe was supposed to be the smart move. Off-road capability you already trusted, combined with a plug-in hybrid system that promised to save you money every single week at the pump. Jeep sold it as the best of both worlds, and honestly, a lot of people bought that pitch. Here's the problem. One owner in Minneapolis watched his premium jump from $2,500 to $4,000 at renewal. Same coverage, same driving record. The only thing that changed was the model. That's a 60% increase for doing absolutely nothing wrong. And the reason it happens is because insurers don't have enough data on plug-in hybrid battery systems to price them accurately. So they price in the uncertainty instead. Add Jeep's historically elevated theft classifications on top of that, and your rate goes in one direction. You bought the 4xe to save money on fuel. The insurance company made sure that didn't work out. Number 10. Infiniti QX80. If you wanted a big, capable luxury SUV without the Range Rover bill, this was the answer. The QX80 was supposed to be the smarter play. Full-size luxury, a genuinely premium interior, and a price tag that didn't require a European accent to justify. Now here's the kicker. You're paying $615 more every year to insure the QX80 than you would for the QX60. Same brand, same platform, just a bigger body on top of it. That's $51 extra every single month for choosing the larger version. Because the moment you step into full-size luxury territory, insurers move you into a higher liability tier automatically. That 400 horsepower V8 gets performance classified regardless of how carefully you actually drive it. And that 4-star NHTSA crash rating instead of 5? Close enough to feel safe, but not close enough to keep your premium down. Same family, bigger bill. That's it. Number 9. Dodge Durango SRT Hellcat. Dodge built something that had no business existing. A 3-row family SUV with a 710 horsepower supercharged V8 under the hood. The kind of vehicle that could haul your kids to school on Monday and embarrass sports cars at a stoplight on Saturday. And people loved it for exactly that reason. But here's the brutal truth. Insurers don't see a family SUV when they look at the Hellcat. They see the platform, they see 710 horsepower, and they price it like a muscle car. Because it does 0 to 60 in under 4 seconds, and that kind of performance puts you in a completely different risk category regardless of how you actually drive it. And then there's the theft problem. Hellcat parts are valuable, and the cars disappear at a documented rate that insurers have absolutely noticed. Dodge built a minivan for people who hate minivans. Insurers built a premium for people who hate premiums. Number 8. Cadillac Escalade. The Escalade doesn't need an introduction. It's the SUV that celebrities pull up in, the one executives love to drive. It's the kind of car that tells everyone in the parking lot exactly where you stand before you even step out. It's genuinely iconic, and for a lot of people, it's the dream. But all of that flex comes at a price. you're paying anywhere from $3,250 to $3,900 every year just to insure it. That's nearly 38% above the national average, and there's a very specific reason why. For years, the Escalade was the single most stolen vehicle in America. It's not just on the list, it's at the top of it. It was stolen so consistently that insurance companies actually used it as the benchmark when measuring theft risk for every other vehicle on the market. Now, GM fixed the problem. New anti-theft technology came in and the numbers improved, but the insurance industry hasn't forgiven them for it yet, and it's going to take a long while before they do. Number 7. Rivian R1S. Just one look at the R1S and you'll probably fall in love. It has so many compelling specs and enough style to make you forget you were looking at an electric SUV. If you wanted proof that EVs could actually be exciting, Rivian handed it to you. But the R1S ranks dead last in its entire segment for insurance affordability. Out of 34 midsize SUVs, yours is sitting at number 34, and you're paying anywhere from $2,950 to $3,770 every year because of it. Here's what's actually happening. Rivian has been selling vehicles for less than 5 years. Insurers don't have enough real crash data to price it accurately, so they do the only thing they can. They charge you for what they don't know yet. Add in aluminum body panels that require specialized shops, a structural battery pack, and a price tag pushing $92,000, and every single variable is pointing in the same direction. You're not just paying to insure the car, you're paying for everything the insurance company doesn't know about it yet. If this list is opening your eyes, go ahead and hit that like button. Now let's get into the top 6 because it gets a lot worse from here. Number 6. Porsche Cayenne Turbo GT. Porsche had to prove something when they built the Cayenne. They had to prove that a company famous for sports cars could build an SUV that actual families would want to drive every single day. And they pulled it off. The Cayenne became one of the best-selling Porsches ever made because it genuinely delivered on that promise of comfort, performance, and daily usability. But here's where your wallet disagrees. The base Cayenne already ranks 39th out of 41 midsize luxury SUVs for insurance affordability. And if you went with the Turbo GT trim, you're looking at $4,850 every year just to keep it covered. That's not a typo, because no matter how sensibly you drive your Cayenne, Porsche's performance classification means you're paying a sports car tax on every single trim. Parts are expensive, repairs only happen at authorized dealers, and with a starting price above $85,000, insurers are already calculating their worst-case scenario before you've signed anything. Porsche spent decades convincing buyers that the Cayenne was the sensible choice. The insurance company never got that memo. Number 5. Mercedes-Benz GLS. Mercedes built the GLS for people who simply refuse to compromise. The interior, the ride quality, the technology, the badge on the hood, everything about it was designed to feel like the absolute pinnacle of what a family SUV could be. And for a lot of buyers, it delivered exactly that feeling. Here's the problem. You're paying $3,148 to $3,520 every year just for insurance on the GLS 450. And if you went with the AMG GLS 63, that number climbs to around $4,100. But that's only part of the bill, because maintenance on this thing runs another $1,750 every single year on top of that. Now add this. The GLE 350 carries a 44% probability of needing a major repair within its first 5 years. Nearly a coin flip. And when those repairs involve the aromatic air suspension or the layered electronic systems Mercedes loves to build in, you're not talking about a small bill. Mercedes promised you the pinnacle of engineering. The repair data suggests the pinnacle costs more than the promise. Number 4. BMW X6M. The X6M wasn't built for people who needed an SUV. It was built for people who wanted one and refused to slow down for anybody. Aggressive styling, a twin-turbo engine that doesn't apologize for anything, and the kind of performance that makes you forget you're driving something that seats 5 people. BMW knew exactly what they were building and exactly who they were building it for. But here's the kicker. You're paying anywhere from $3,570 to $6,230 every year just to insure it. That's $490 more per year than the average luxury SUV and $922 more than a Lexus RX 350 for insurance alone. Because the moment BMW puts that M badge on the vehicle, insurers lock it into performance classification, and that's where it stays. It doesn't matter how carefully you drive it. The engine specs set your rate, not your behavior behind the wheel. And then, if you add in BMW's OEM parts pricing, those large custom body panels, and the $1,600 every year in average maintenance costs, the full picture becomes very hard to look at. The Prestige comes with a bill most buyers never see at the dealership. Number 3. Tesla Model X. Tesla made you a serious promise when they launched the Model X. They promised you zero emissions, cutting-edge technology in every corner of the cabin, and a family SUV that was supposed to cost less to run than anything burning gasoline. For a lot of buyers, that promise was worth every penny of the purchase price. But here's the brutal truth. You're paying between $3,000 and $5,300 every single year just to insure it. And on top of that, repair costs on the Model X average $1,600 a year. That's the highest of any Tesla model on the market, because Tesla builds everything proprietary. There is no aftermarket, no competition on parts, no negotiating with the repair shop on what something costs. It's one authorized facility, one price, and you're paying it whether you like it or not. And the unibody aluminum construction means even a minor parking lot scrape can turn into a large panel replacement. Now add in the fact that Tesla-targeted vandalism has become real enough in certain markets that insurers have already adjusted premiums to account for it. Then factor in up to 1,020 horsepower depending on your variant, and you're sitting in the highest performance classification tier there is. A fender bender that costs $800 to fix on a Honda costs $3,200 on a Model X. Tesla designed the future. The repair shop owns it. Number 2, Land Rover Range Rover. The Range Rover didn't just enter the luxury SUV segment, it created it. Every other vehicle on this list exists in a category that the Range Rover essentially invented. If you own one, you already know the feeling it gives you. There's nothing else quite like it. But nationally, you're paying between $4,230 and $4,870 every single year just to insure yours. And if you happen to live in Detroit, Michigan, that number becomes $8,200 a year. That's $684 every single month, just for insurance. Let that sink in. Because you're covering a vehicle that starts at $107,400 with parts that ship from overseas and a repair bill that averages $1,174 every year, which is already well above what the rest of the luxury SUV segment is paying. And that air suspension system that makes the Range Rover feel like it's floating over every road you've ever driven, when it needs work, and eventually it will, the bill is catastrophic. The same engineering that makes it feel effortless to drive makes it brutally expensive to fix. In some American cities, owning a Range Rover means writing a check every month that's larger than most people's car payments, and that check doesn't go toward owning anything. Number 1, Maserati Levante. The Maserati name carries something that most car brands spend decades trying to manufacture but never succeed. Even Maserati owners can't really describe that feeling, and for a lot of them, that was enough. The badge alone closed the deal. But here's the reality. You're paying between $5,040 and $6,150 every single year just to insure it. At the top of that range, that's $512 every single month. And that's before fuel, before maintenance, before whatever your loan payment looks like every month. Because Maserati parts come from Italy. Repair times are long, the labor is highly specialized, and the number of shops that can actually work on one of these is remarkably small. So when something goes wrong and you're waiting, you're also paying. And then there's the sales volume problem. Maserati doesn't move enough units for insurance companies to build reliable claims data. So instead of pricing it accurately, they price it at the maximum and let you absorb the difference. Now here's the part that should genuinely make you angry. The Levante loses 79% of its value within 5 years. But that insurance bill you're writing every month, it doesn't depreciate with the car. The Levante costs more to insure in a single year than many Americans earn in a month. For a vehicle that's losing 79 cents of every dollar you paid for it, that's not a luxury tax, that's a trap. And there it is, 12 popular SUVs with insurance rates that should genuinely be illegal. Now I want to hear from you. Which one on this list surprised you the most? And are you paying any of these rates right now? Drop it in the comments because I read every single one. If you're not subscribed yet, now is a good time. Now go watch this video on the SUVs with the worst depreciation in 2026. I'll see you in that one.